Good Saturday morning everyone and welcome to the BCB Cyber series that takes on the tech stocks that can provide the cyber fuel we need to pursue our digital wealth passions. Unfortunately, not my voice today as I have some laryngitis. Today we are tackling those big dividend payers that can add passive cash flow to our portfolios. As we dig for the cyber fuel we need, we are always working to make sure the best of the best, those monster companies in tech play, form a key portion of our portfolios. For dividend payers, BCB Cyber is always looking for a forward annual dividend yield of over 3%. As always though, we dig deeper still, looking for those companies that are pushed by incredible disruptive tech with a great story, not to mention having a solid base in the numbers. The numbers represented here were those posted in our blog post on the subject from this past Monday. With some of the biggest names in industrial technology, Raytheon Technologies presents four massive sub-companies that are pushing the boundaries of tech deployment in aerospace, defense, and engineering. After a recent megamerger, the new companies held within this tech leader are 1. Collins Aerospace, 2. Pratt Amp, Whitney, 3. Raytheon Intelligence Amp, Space, 4. Raytheon Missiles Amp, Defense. Raytheon isn't just your normal tech giant in the industrials with a massive industry impact, it is also, when considering its history as United Technologies Corporation pre-merger with Raytheon, a recognized dividend aristocrat. Meaning that this company, a cash dividend payer since 1936, has a current track record of 25+ years of consecutive dividend increases and is included with the best of the best dividend growth stocks. Before we dive too deep though, we strongly advocate that we don't act solely on anyone else's opinion, even ours. Make sure we are all thinking for ourselves as self-definers and making our own decisions. In the end, the responsibility is on each one of us as individuals. So decide wisely. Jumping right in the BCB Cyber way, we cover three quick pieces of important information so we can get moving on our day. First, we tackle the story to find out who and what the company is. Second, we look at the numbers both positive and negative, and finally we discuss our position on the stock. This is TS2B, Tech Stock to Buy, Dividend Payer Edition, and this week we are going to take on Raytheon Technologies, the Waltham, Massachusetts disruptive tech play redefining aerospace and defense with a mega merger of equals for the ages and surprising value. Most importantly, RTX, like Alteryx 2 weeks ago, and Tesla last week, hits all the checklist boxes we love to see in a disruptive tech company. The story for RTX begins as a mega tech giant with a long growth history. In addition, due to the current climate, it presents an unusual value proposition for cyberized investors looking to add a passive income stream to their portfolios. Perhaps most importantly, is that in RTX, we see a management team ready and willing to be on top of the situation and provide the dexterity necessary to navigate tough times. Turning to the numbers, BCB Cyber loves to follow 5 specific metrics: revenue growth, forward price to earnings ratio, return on assets, operating margin, and debt considerations. While RTX does have a few risk factors, it does also hit on several other key metrics: strong revenue growth history, a promising value proposition, a positive return on assets, a positive operating margin, and a solid, growing cash flow alongside investment that will help with debt consideration. A value proposition in current forward PE of 17.04, representing a discount to the market, and even more significant a price to book in the most recent quarter of 1.43. This stock represents a deep value to the past. And even since Monday's post, the value has even increased as the market repriced the stock lower. This stock, no matter how you cut it though, is an incredible value based on the sales proportions alone. In addition to a value price, we see a company with a strong operating margin of over 11% and a great return on assets of well over 3%. These are strong numbers for a company whose stock price is falling as it is. Fear seems to be ruling the market. Moving forward, the balance sheet does require some monitoring on our part but does possess a strong cash position, nonetheless. Finally, as a dividend payer, BCB Cyber loves to see the over 3% forward annual dividend yield, and RTX currently has a yield of 3.04%. And don't forget, there is another opportunity for a passive income payout coming in November. Now we turn to the BCB Cyber Quick Take, and as of this Monday morning, on October 26, 2020, our own portfolio had a position of 9.73% in RTX. Since then we've made sure to add even more. This is definitely a dividend payer worth buying at the right price, and one that BCB Cyber believes to be the right fuel for the fire. As always, think for yourself, do your own homework, and cyberize your life with the best in disruptive tech. Learn more in our wealth section and dive deeper with establishing the baseline.